welcome on board. Sanjiv Bhasin too. Sanjiv, hi, good morning. Seems like 20,000 is pretty much here. Your prediction is bang on.
Fingers crossed and good morning, Aisha. Yes, G20 is raring to go. Delhi is built is built like a fortress, so it's secure as a fortress. And we are expecting a lot of bonhomie on India, and that is evident that Apple has lost $200 billion just on the back that China exports and the China slowdown is evident. And I think a large part of the foreign money is now destined to be in India. So yes, fingers crossed, 20,000 next week. I think the index has consolidated for a fairly long period and it was bound to give a breakout. But who's to question the veracity of the mid caps, which are now the darlings of the market. And every day you can pin down what you want to make money on, which is where a little bit of the froth may be a little bit problematic.
Yeah. Okay, so are you suggesting that take some money off the table when it comes to your small cap investments and divert it to large caps instead?
Aisha, it will be easy for me to say that, but in a bull market, you will have excesses built in, and we'll only know the excesses getting over excess when the market's correct. Right now, I would definitely bat for Reliance, Apollo, or the ICICI of the world, but keep some part of your ammunition in dry so that when you do get some correction, you can actually use it. But like I said, the way the mid caps, particularly the PSUs, have been performing, it seems that there is a lot of under ownership as far as the mutual fund industry goes, and you're just seeing a part of the catch up over there.
Oh, well, yes. Interesting news coming in on landmark cars. I don't know if you tracked this one. They're looking to add Mahindra vehicles now to their offering. So, I mean, clearly diversifying and de-risking in that sense.
Well, Aisha, this has been one of the new listings which we added closer to 550, 600. The stock has been re-rated over there. I still think the potential of the business, the management is excellent. And if you have a 2-year vision, then this is a must-have in a portfolio. Just to add that the stock has seen a very, very smart rally. But I still think that adding Mahindra will add to its portfolio. And like I said, now you have to be discerning in the type of stocks you get into. But if you recall, some of the new ones, the new age stocks, Paytm, Zomato, PB Fintech have been our top picks from almost half those levels. Landmark, as a disclosure, is in our portfolio. We are very, very bullish on this stock.
Okay, Mr. Bhasin, point taken. But yesterday we saw a big move on United Breweries as well. A new leader coming in there in terms of the MD and CEO. You look at the Alcobev industry also very closely. What's your top recommendation from that?
So, Anisha, good morning. McDowell has been a personal favorite since long. As a disclosure, I hold it since almost 18 years. And I think that the beverage or the alcohol market is just revving up. Look at a stock like Radico Khaitan, look at the whole basket. And who's to talk about the consumption? You have the G20, you have the World Cup cricket. I specified Devyani International as one of my topics. And I still think that United Spirits in that basket is doing well. I don't track United Breweries because we have United Spirits, but I'm very bullish on Devyani International and the whole gamut of consumption. You've just heard what Mr. Chatwal told you about entertainment and hospitality in the hotel sector. I think these go hand in hand. Brands are going to rule the roost, and you have to stay with the large cap. So Devyani and United Spirits, as a disclosure in our portfolio, we continue to be very, very bullish on both these stocks.
The other one that I want to highlight is L&T. There's, of course, a CLSA note as well after them bagging that Saudi Aramco order, which they're saying is going to significantly balloon their order book. Of course, they have the competency for it. It is one of the few preferred contracts as well of Aramco. And they're maintaining the buy, CLSA that is, and the target price is now 32.40 on L&T. Sanjiv, what about these large caps which are also now beginning to participate? Of course, L&T has been the preferred one and only gets more dearer after this Saudi Aramco order. But the other one being HDFC Bank as well, which has finally begun its move.
So, Aisha, in a long time, I have not seen L&T hit new highs. So has NTPC. So has Coal India, which has surprised, 220, 270 in almost a couple of months. And it's telling you industrials, power, hydrocarbon, engineering, electrical, this space is rocking and there is no two ways. Cummins, Thermax, ABB, Siemens, you name it. L&T takes the cake. Now their order book is so large and the execution is, always questionable for the PSUs, but not for a private company like L&T. And now they're talking of double-digit margins. So I think power, infrastructure, and the likes of L&T, Coal India, NTPC, and I'll give you a couple of dark horses on the mid-caps, which I think can be equivalent to the return, which, if you are looking for that. But L&T overweight, NTPC and ONG, Coal India are also three overweight stocks for us.
Okay. Why is Coal India overweight? Because if Coal India does well, NTPC should not do well. It's like saying if metal prices, they go higher, it's bad for auto stocks. Either metal should go up or auto should go up.
So you are right. But Nikunj, take it with a pinch of salt that pass-through of power is now very, very easier than what it was perceived to be. I stay in Gurgaon, and DHBAVN in last 35 years has never, in the first year in 35 years, they're declaring a dividend, which they tell us that power generation, distribution, and transmission, all that is in the best pace ever. Power is at a surplus and power rates are rising. So yes, the hike, the cake on the pudding is that Coal India which was discarded because of thermal and other issues, is now revving up. And I think that this whole Ukraine-Russian crisis has actually turned out to be a blessing for them. You see the dispatch numbers. It's the third largest producer of coal in the world. And I think it is just getting its recognition. Now, the recognition can be a little bit hurting for one of the two, but the market cap is what you see as far as the returns go and the possibility of getting more upside because of the change in environment. So, like I said, both of them are must-haves in a portfolio, maybe on some correction.
Mathematically, these stocks have done something what could be called as extraordinary in terms of recent outperformance. Kunal is of the view that technically they are not overbought, even though the run-up on paper is looking extreme. What should one do? Because now they've really become the talk of the town. I mean, everybody is talking about it. Everybody wants to chase them. What should one do? And I'll split the question into two, Bhasin sir. First, for those who own, should they hold on? And for those who want to buy, how should they approach it?
So, Nikunj, that's $1 million question. These stocks, like you said, are in a whole bull market of their own. And who's to question the top? Because under ownership is there. It also highlights that PSU businesses were unrecognized for a very, very long period. And only now the recognition is coming. So I agree that they are definitely overbought. They are due for correction. But look at the way the money is coming from mutual funds in the mid cap and the small cap, where they are raising that. And it tells you that mutual funds actually missed the bus. Most of them are underweight PSUs, whether it was oil and gas or GAIL or NTPC, and now they are just catching up. So I still think all corrections will be bought. My advice would be, if you hold these stocks, continue to hold, because you don't know, sky is the limit in the sense that they can rise higher. And if you want to own them, then start nibbling into them. Put some money now and put some money as you get some correction, but make a basket of stocks which you want to be. The CPSE ETF, which I've been advocating for the last 3 years, is up to 45 from 15. I still think that has 12 very good PSU stocks. Try and buy that ETF, or look for some mutual funds which have an ETF focused into PSUs.
Kunal, let's
IDFC First Bank, we were just highlighting that stock earlier, how it's managed to outperform its other banking peers. But do you think most of the rally is over and it's time to switch into other names?
Yeah, good morning, Anisha. You brought something which is very close to my heart. Last 2 years, I was advocating this at 30, 35 to Nikunj, and there would always be the argument that why should it perform? It was a lending institution and so on. And I only pursued that stock on the basis of Mr. Vaidyanathan. Today there is a sell report or whatever, but Morgan Stanley has been bearish from 30 rupees. How will he justify 100? The business is humongous. Mr. Vaidyanathan, according to me, is the best banker in India. And I see no let up in this stock. Yes, it's an expensive stock. It has run up far in excess. But who's to blame? There was so much of under ownership. And I think IDFC First is headed higher. As a disclosure for me, IDFC First Bank will be the next SDFC in the making in the next 5 years. So please stay put. If you are invested, And if you are looking for corrections, then this would be good opportunity as it consolidates closer to 85-90.
Okay. IDFC Bank, 95 rupees. It, like we talked about it, first there was a lot of disbelief, then there was realization, then there was acknowledgement, then there is re-rating. That is how the entire curve of IDFC Bank has moved. At the peak of the COVID, the stock had just got bombed out. Nobody talked about it. Nobody thought about it. And then last 1 year, when the NPA problems of Vodafone and all the other challenges they had in the infra lending from the legacy book, when they got sorted out, the stocks managed to come back. Cost to income ratio for IDFC Bank is still very high. If they're able to bring it down, that is the trigger. You know, for other banks, triggers are pure vanilla credit growth, pure vanilla fee-based income, pure vanilla growth in terms of technology adaptation. But for IDFC Bank, the cost to income ratio has something which can really work like a charm for them. Similarly for SBI, 2021, they were able to take the ROAs higher, and look at what happened to the stock. So if you're looking at large cap banks, very few banks have this multiplicity of triggers in the short term. You know, for HDFC Bank, the merger is a trigger. For ICICI Bank, the turnaround has already happened. For IndusInd Bank, there is nothing large in terms of a trigger which will generate upside momentum, because a lot of the repair work has happened. For Axis Bank, Max and Citi, I think that is really work in progress. I mean, for IndusInd Bank, I could also say the Hinduja stake going up could be the trigger, but that would be conjecture. So, Bhasin Saab, apart from IDFC Bank, which is one large bank, where do you think there could be trigger? I mean, it is not a bet on pure big picture of credit growth and a new credit cycle. Where do you think there are these small triggers which can generate more upside potential?
Yeah, first to clarify, Nikunj, you rightly put it that return on equity will take time. This is what Vaidyanathanji is specified. You know, it was a lending institution which had benchmark loans at much higher rate of 9.5%, but almost 80% of that book he has redone, at much lower rates. So yes, there will be this cost of funding. But on the other hand, I think that the growth outlook and the NIMs which they have and the type of variable growth which they are looking at is very, very impressive. The other large bank will be ICICI. No question about that. At this price, if there is one stock I can put my money on, it is ICICI Bank. And I think that is now going into 4 figures, maybe in the next 2 days and beyond. So 1100, 1150, if we have to go to 20,000, which I'm very sure is coming by next week.
Okay, so that's the take coming in. But you know what? The management meetings are underway. Of course, a lot of conferences are taking place, and my colleague Vinny will tell us what the managements of Eris as well as Page Industries had to say. Because we'll get her joining very soon, because Page Industries was one stock which was firing away in the trading session yesterday. They are targeting a revenue of almost 8,000 crores by FY26. Mr. Bhasin, what's your take on this, Page Industries?
So Anisha, this stock goes back to 2007-8 when I was in Deutsche Bank and we did an IPO, pre-IPO placement at 750. And in 2 years, it was 1900. And as a hedge fund, we were laughing our way after booking profit. And look where we are. Someone who makes undergarments is now rocking. And, it tells you that the new millennials will pay anything which suits them. Those low jeans and your backside showing the underwear is a sign of strength. On a lighter note, I think Page Industries is a must-have. It's one of the best consumer stock. And I think the margins and the new portfolio which they have will only add to that. The stock has seen a sharp run up from that 37, 38,000. So wait for declines or add some. But these are themes for the next 2-3 years, which are not going to be changed purely on the basis of brands, which is why I stress that Indian Hotel or a Devyani or a United Spirits cannot be rebuilt.
I want to take those 2 top mid-cap ideas that Mr. Bhasin has for our viewers.
Yeah, so Anisha, you recall a couple of days back, I gave you my top pick, JP Power. Now I'll tell you the rationale. 2,500 megawatt, 500 at Bina, 1320 at Nilgiri, and 400 hydropower at Vishnuprayag. This trades at a market cap of 6,000. NTPC, which is 10 times its size, trades at a market cap of 2,33,000. In the end, it is power by market cap which you measure. So I still think they are EBITDA positive, and this quarter the numbers will be very, very strong. Now, if you are looking for a little high risk but a good proxy to power, then it has to be JP Power at 9 rupees. I think this has the potential to easily double from here and still look cheap, not on the only basis of market cap, but on the basis that the company has redone a lot of the debt reshuffling, and now EBITDA is bound to show you returns. Second pick is again Tata Tele Services or TTML, which I think is only going to be the flagship company of the Tata as far as the consumer facing is being. And given the extent of digital AI cloud, Tata Tele is bound to be re-rated. So if you were looking for a bargain for the next 2 years, which can double, triple, it is Tata Tele for you.
So what is the operating business in Tata Tele? The stock just went through this, this mania phase post-COVID, went from 5 rupees to some 300 rupees, came crashing down. I looked at the numbers. What is the operating business of Tata Tele, which is where I'm lost?
Yeah, so Nikunj, now whether it's TCS, whether it's Tata Com, or whether it's Tata Elxsi, all three are the big giants as far as their niche businesses go in digital, with more digital. This is a summary of the consumption arm of that, from ICT to AI to cloud to even Zoom. Anything you do on Zoom, they have a part share of that of their license. So the revenues will get built in over time as the consumer face comes in, but it is going to be a very, very big consumer face where margins will slowly accrete. We are looking at a business which has the potential to double, triple, even 4 times in the next 2 years on the back of the Tatas and on the back of the services on digital which it can provide going forward.